Hey ho, it's off to work we go, with a bucket and spade and a hand grenade. Hey ho, hey ho, hey ho, hey ho. Better do some work.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, coffee obsessed Scruffy trader. And it's a good day today because it's the weekend. And if it's the weekend and I've got a coffee, well, it must be coffee time with Scruff. Oh no, could also be coffee time with Wink.
Just brought him so you don't forget him this time.
Yeah, we sorting out holidays today.
No way.
Why? Because she says I have to. Apparently, I was working a bit too much on the last holiday, and I wasn't very well for 2 days of it, which meant it was a bit of a shame. So I've had to book another one. So we're going away again in a couple of weeks' time, and this time Stormy's coming, and apparently Winky has to come as well.
Of course we have to come.
I know. No, I'm looking forward to it. And why? Well, sometimes you need times of peace and reflection. And those are the times when your trading gets better, believe it or not. And that's what the weekend is for me as well. Now, I know this sounds odd when I'm comparing a holiday to a weekend, but the reflection time is what can make or break you as a long-term trader as opposed to a short-term trader. What I mean by that is I watch posts all the time in various Discord groups. I've gone into the 5%ers and I watch a lot of it. And a lot of it is looking sort of for, I was going to say the instant gratification or instant money. And also in some of the forums that I used to be in, it was a very similar situation. So there's a very strong trait to fast cash. And through the years, nothing is fast. It's steady growth constantly. And the only way I can kind of put it into perspective is a business. And something that was told to me a long time ago is very true. Now, most people know it takes around 3 years to get a business to be running. And the analogy that I make with that is the first year you feed it, the second year it feeds itself, and the third year it feeds you. So it's a slow, continuous growth. Trading is the same. When you're first starting, you're going to be feeding into your trading a lot. Now that is going to be a lot of time, a lot of education, a lot of money if you're funding accounts, and you will probably lose that money.
Who'd be stupid enough to do that?
Justify, stupid.
Why? Because you're not rightly sure what you're doing. A lot of the time you're taking a punt. Now the second year you start getting better, or if you break it into 3 profiles, that is, because you might do it in 3 months, 3 months, 3 months. But you get the point. Now, the next part of it, you'll start to get a little bit consistent, shall we say, move forward slightly, but you kind of break even and you're trudging water. And then in the next phase, you break through that barrier and you start making decent money. Was a process what I'm driving at in this. Now, for me, one of my processes is the weekend reviews. And when I go on holiday, I do take my laptop and what have you with me, and I will be working this holiday. Why? Because I run the Scruffy squad, and I do go away a lot now that we're allowed to travel, which is the beauty of trading. As long as I've got an internet connection and I've got my laptop, I'm working. And I only really do an hour a day, so it's no big shake while sort of wink sorting a hair out or having a cup of coffee or whatever. I can log on and sort of do what I need to do, because I trade roughly the same time every day as well. I like to trade early morning, get in, put my pending orders in, and then just let it get on with it, sort of thing. So it's very simple to do that. Now in the reflection process, which is what I'm looking at now, I'll quickly show you something. If I flick it over, because I'm about to do this. I have what I call a window of the world. And within this window of the world, I have my primary products that I look at. I do look at multiple products. But these particular 8 give me a quick snapshot of what the world is thinking. And that's something as well. Because again, when you're looking for quick money, I always see the same questions. What's the best market to trade? What time to trade? How big should your lot size be? How big should your risk be? Well, if you're asking these questions, you've actually not reflected on what you're doing. And I hope that makes sense. Now, when I look at these, and basically what I'm doing at this moment in time, we'll tidy this up. We flick them down. I clean them all down on a weekend completely, whole lot, and I strip everything off so that they are completely clean. And the reason why I do that is because if I'm going to analyze a chart, I'm just going to clean these off while you're here, and then I'll kind of give you an indication as to what I'm looking at. Just get all the marks off them. It's one of the things with this platform. I do all of my charting on this screen. I do trade a lot within this platform as well, but I also trade out of sort of my Black Bull and my prop fund accounts, which are MT5, and I'll quickly show you that. If I sort of pull this down, they are very, very similar layout as to how I do this. Have my alpha watches and what have you in here, pretty much just identical to what you're seeing on my web trader. Why? Because I mirror everything. I do everything manual. Not really into robots and automation, so it's another reason why I use pending orders. But what am I getting at with this? Well, if I look at my watch list or my window of the world, I can get a snapshot of what's going on. So the pound drives the FTSE, the euro drives the DAX. Then I have my oddballs over here, because these are my primary markets, these ones here. I'm looking at the US dollar, which is here, and that US dollar is driven by gold, because there's a correlation between the two. I like pound JPY because again there's a correlation here between the yen versus the Western products, which is there, and then you've got the world driver, which is oil. So I can see roughly what's going on in the world just looking at these 8 products. And then from there I can drill it down into, well, if I just quickly show you this, pull this across into a strength sheet, and this will look at all of the pairs, and then I've got an engine that I can drive, because if I just pull this back, I have an engine that runs it behind where I can input all the numbers. It tells me the strongest, the weakest, the change of strength over time periods, how that change of strength is affecting within 24 hours, what the ATRs are, and it pulls out good, bad products. So if I don't see anything in my world drivers, and in fairness, cable and DAX pull up every day, this will find something for me. And then I also have another equation on this side that pretty much tells me how to work a direction out as well. Okay, so there's a mass amount of information here. And how is it done? Well, it's very simple. It is done through reflection and homework. And that's what I do on a weekend. I will drill into the product that I want to trade. So in this case, it's the world drivers. I'll mark each one of them up, get my levels into play, you know, and it's key levels, not just, oh, well, this one's an hourly, I think it's all right. Well, it's actually paper thin, holds no weight whatsoever. You want to be looking higher up the charts to get your levels in. And you're looking at key turning points. Why? Because that's where the big boys play. They're not bothered about a 5-minute chart. Once I've got those levels in place, they are done for the week. So a little bit of time on the weekend while you're reflecting goes a long way. Now, the journal that I've just flashed up and shown you is something that I use all the time as well to journal what I'm doing. And I'll recap it on a weekend and I'll look for strong points and weak points, but mainly the weak points. Why? Because if I focus all the time on the wins, I don't really get anywhere. But if I focus on my failures, then I can start making headway to not fail tomorrow.
You serious?
Goes back to my blue chip days when I was looking after reps and one thing and another. Whenever I wanted the bottom line to be lifted up on the books, I wasn't really worried about the top performers because they'll always perform. I was more concerned about the weaker ones. And if I could get each one to perform just 5 or 10% better, and that goes for accounts as well. You know, if you've got a small account and you focused your energy on that small account and you lifted it up by 5 or 10%, that makes a big difference to your P&L. Why? Because like I say, the top performers will always perform. Your charts are very similar. A lot of the time, you're focusing too much on the big hitters, whereas what you really should be doing is focusing on the ones where you're not so strong on and understand why you're not strong on it. And if you can figure that out, you get two choices. You go, well, I don't like it at all. I'm never going to trade it. Well, that's reduced your losses because you're not trading it in the first place. I very, very rarely trade the Swissy. Why? I don't understand it, and I've been burnt on it a few times. So I have a psychological barrier with it before I even enter the market. And because of that, I'll make a mistake. Do I trade the DAX? I trade the DAX every single day. Why? Because it pays me every single day. I understand it and I can go with it. And just to add a little bit to this, if you are an indices trader and you want to try a prop firm, the 5%ers have introduced indices into their sort of portfolio of products for the instant funding. And, well, it's a no-brainer, to be honest, if you are good with an indices and you don't like Forex. You can now use a prop firm to enhance your profits. If you're interested, there is a discount link in the description below. You'll get 5% off and the link will take you straight to it to find all the details. But what I'm driving at with sort of the DAX is you get to know a dance partner, shall we say. And that's why I look at that basket of 8 products. I know each one of them quite well. And if I never traded anything else and I only concentrated on those 8, I'll make money every day, as you see. And why? I don't take risks, guys. I do my homework. And that's what this video is all about. if you take anything away from it, it's do your homework. So what do you need to know? Well, let's flick it back and we'll have a quick look. So if I took the DAX for argument's sake, and you looked at a daily for your starting point, what do we know about the charts? Well, the first thing we know is the price is always the same. So if you're looking at a minute chart, the price is in exactly the same point as it is on a monthly chart. But what's the difference between the two? Well, it takes a lot of information for the monthly to form one candle, whereas a minute's chart takes no information. So where do you start to build up your picture? Well, you want to start high up the chart, because the information in that candle is probably holding a greater amount of weight than, say, looking at a minute, because it'll change like that, whereas a daily, it doesn't. And you can start doing basic things like candle counting. Go, well, on average, it's kind of a rule of 3. So candle will run 3 times and it'll turn. You know, if it isn't running 3 times, it could go to 6 times. Sort of case in point here, 1, 2, 3, 4, 5, 6 candle turns. The rule of 3 comes in quite a bit. Is it accurate? Not really, but it gives you something to think about. And the way I look at it is, well, if I've seen 3 green candles in a row, I'll be pretty dubious about the next one, or I'll be looking for something to turn around. All right. Does it hold much water doing that? No, but it starts putting something in your mind to think about. So your price, how many green candles, how many red candles? What was the last candle that was formed? Well, the last one is red. Okay. What are we looking at here? Well, in a situation like this, I can see it's been in quite a loose range. You can see that. Why? Because just visually looking at it, it's going in a straight line. And it's sitting at the top. If I had 1, 2, 3 candles up, or 4 candles up, it's come down 2, a big surge, and now there's a big red. Why is that? Well, if we look at these 3, that third one ain't very strong. Then there's a tail to the top, and it came down. There's a flush, goes back up, and it's failed. Right, okay. So could we be having a move to the downside? These are little things that run in my mind, right? So I could frame the price very easily. Simple stuff. Just drop something in here, you know. Just do it quickly, just to give you an example. Okay. So I've framed that in. I can see what's going on. So if I have a theory this is going to the downside over the next few days, well, I'll be watching to see if that tops out. If it breaks that, maybe it's readjusted. But as long as it stays under there, then I've got a view to the downside. Okay. I can then move it into a 4-hour and see what's going on. Sure enough, 1, 2, 3, starting to go the other way. So could the value level be here to move away? Who knows? What else can I see within it? Well, on this 4-hour, I can see 2 major drives. I can see one here. So I've got to easily draw a fib line in. Well, where did that move start? Well, it probably started there. And it got up as high as there. So if I'm looking at a 50 line, which is there, and I get rid of that, what's happened? Well, there's the drive, and it came to the 50 to the pip. So I have caged the price even further based on basic market structure. And then we've got this one here. And again, I could say, right, there's another drive. We know fibs work very well in nature and maths. Put that into there. Put another line on. There we are. Right, what are we seeing now? Now, with just basic market structure and basic sort of Fibonacci levels, I can see that's been respected. This one respected because it's gone up, topped, and where's it stalled? On the 50. So this could be an entry zone. This can be an exit zone. Basic stuff. But if I map out my charts fully, right through, when I come to trade on a Monday morning, what happens is I've already got my markers in place. But not only have I got my markers in place, I have probably a good idea of what the market is trying to achieve over the next 3 to 4 days. And then that way, my reflection time is actually mapped out my trading time. Hope that makes sense. So the idea today was really just to get you to think along the lines of homework. And why? Because if you're not, you're just gambling, guys. You're just flicking on the screen. You might have a coffee in hand and praying to the trading gods that they're going to give you a decent return. It's not quite that simple.
They've done studies, 60% of the time, it works every time.
That doesn't make sense.
What you need to be looking at is why you're going to get a return in the first place. And the only way you'll do that is through homework. And your homework comes from starting at the top, working down each of your chosen products, know them intimately, and then just trade the opportunities as and when they come. And that's what makes me consistent, because I do my homework and I do it every week. So on a weekend, I reflect, look at the primary candidates, what I have. They are always ready to rock and roll. Use my strength to get in and out of markets. In fact, if you give me a second, I'll flick this back on and I'll show you where you can get some strengths as well.
Well, we're waiting.
Okay, guys, if you come on to this particular website, it's a website called FinViz. You'll get lots and lots of information. It's predominantly for stocks, but it does have a good Forex section in it as well, because you can use this screener for stocks. If you're interested, I'll show you how it all works. Now you can screen into an individual stock. Just drop it in the comments below and I'll do that for you. But if you come over onto the Forex tab, it'll tell you the major currencies that are running, and it'll do a scale of the weakest through to the strongest. And again, this is if you can't work it out yourself, it is a nice and easy way to figure out your pairs. So you can go, well, okay, the US is the strongest. Well, I'm going to only look at the bottom three. So US JPY, US Oz, US Kiwi, that sort of thing. Okay. Just helps you with your decision making. And if you've decided that you're going to become a trader, well, you're going to need a broker or a prop firm. And if you want to know what I personally recommend, you can't really go wrong with Black Bull. That was the MT5 platform that I showed you. Very tight spreads, next to nothing to get in now. They've actually just reduced this from $200 down to $50, and you got a 500 to 1 leverage, so you can spread your pennies out a little bit better. What I will say about leverage is, though, treat it with respect, as you must all trading. And then from there, it runs over into the 5%ers, and I'll quickly show you that. And then I'll show you how I set up my MT5, which not only mirrors what you see in a prop fund, it's what I do in real life as well. And again, it's homework, guys, and I'll show you that. Now, with the 5%ers, you will get up to 4 million in funding, depending on how good you are. And as they are now saying, they have indices, which is why I've dropped it into this video. I spend a lot of time with the 5%ers. I've got a lot of time for them, and they're probably the only company I really put my name to. And they don't pay me to do this. I do it because of the Scruffy squad and the guys there wanted to try it. And I speak from experience. And, well, it is my experience because I passed it 3 times. There you go. Proof's in the pudding. And not only that, they do pay me constant. In fact, I got a payment the other day. I'll show you. Why? Well, kind of dispels a couple of myths, I guess.
Isn't that logical?
And this is from my tradings. There you go. Lots and lots of different payments. Why? Because I trust them and I've never had an issue. So when I look at the value that they offer, it's worth it. 85 euros to get into a fund of 100k. Peanuts. Freestyle. Trade any way you want. Don't even need a stop loss from 285. You putting 285 into a brook. How long is it going to take you to get to 4 million? Because you keep 100% of your profits with this particular program. You like indices? You've got your instant funding at 235 buy-in. And you trade the DAX. You can get that back on the DAX in less than a week. Because it moves that well. And there you go. There's the stats. And I've showed you that it gets paid. Can't be any fairer than that, guys. I genuinely can't. So where's all this gone from? Well, I did say I would show you my MT5 layout. And then I'll let you sort of make your comments below. And we'll see how it goes. So let's have a look. MT5... Pull this up. I'll do it later. I'm not doing the restart just yet. That's the same sort of dashboard that you've seen. I break it up to make life easier for me. Because again, it's all about homework. If I want to trade the Aussie, I have all of the Aussie pairs together here. Why? Because I can get a snapshot of what the Australian dollar is doing. Are they all moving down? Well, if they are all moving down and I'm deciding I'm going to be trading Aussie CAD for argument's sake, it adds weight to what I'm looking at. Then from there, you can take it down into, well, I've got my indices, which is done pretty much the same. I only really trade these two. So these is what I focus in on. Move that down. And then you can say, right, I'm going to trade, well, as I said, the Aussie. I can put all of my marks in here. Very, very simple way of doing things. And it's all driven from an Alpha Watch, which is there. Homework, guys. And that's a mirror of my web trader you see all the time. And if I pull up my 5%ers, it looks identical. Rinse and repeat. And that's it. So do your homework. Reflect on what you've done. Focus on your failure rather than your winner. And then just do it again the day after. Simple stuff, guys. So fire your questions. I'll try and do videos in and around them all the time. And one thing I'll say about your questions, because I get this all the time, it's just, oh, just show me how to get in. Just show me how to get out. Trading is so much more than that. In fact, it is infinitely more. The entry of a chart and your targeting, etc., is a small, small part. You need to understand the direction. You need to understand the turning points. You need to understand what the ATR is. In other words, what the market will give you in a given period of time. And then your entry and exit is just the last part of the puzzle. That's how you trade, guys. And what I'll say about day trading and swing trading, because I was asked this last night. If you're day trading, and it's kind of also a salute to Kitsu, sent me an email talking about this. I was explaining about being market neutral. That's what day trading is. Don't go into a day trade with a fixed direction, because the market will oscillate throughout the day. And just because you're looking for shorts doesn't mean to say the market isn't going to be pulling up first. And it can pull up for 6 or 7 hours, which is best part of your trading day, before it moves short. So you could be wrong on the main direction, or I should say go against the main direction, but be right with the trade. There is a difference. But when you're swing trading, it is an investing mentality. You have to be swimming in the same direction as the river. You don't want to be swimming upstream. So that's the two disciplines, and it's why a lot of day traders fail, because they look at the overall trend and they think that's the way to go. But if the price is pulled away quite aggressively, there has to be a pressure release, and that pressure release can make you decent money. Be right at the right time, as a good friend would say. So all I'll do is I'll leave it there, ponder your thoughts, and I'll answer every single comment. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.